when you talk about tax, there are two types of tax. What do you think the second type of tax is?
Indirect tax.
Very good, intelligent. Direct tax. So you have direct tax and then you have indirect tax. Segregate. Direct tax and indirect tax. Who suffers and who pays? If it's same,
Suppose
meaning how I explain this to you, who incurs, in other words. Yani, you go in, you make a profit in your business. So you have a business with a partnership with a Qatari, and you make a profit of 100,000. So your capital is 49%. So how much is the profit for you? 49,000. Stop. Now the tax department in Qatar saying that you need to pay 10% of the profits attributable to the capital of the expat. So in that case, you need to pay a tax of 4,900. Now, whose money is this? Whose profit is this? Your profit. And who will pay this to the department?
who will pay?
Who will pay? Your profit, you have a tax, and then who should pay this to the department?
Company.
Yeah, company, and whose company now?
Me.
That means profit for you, you suffered this tax, and then you are paid. Correct? So in that situation, that type of tax we call it direct tax. Example,
Income tax.
income tax. You also have something called indirect tax. Who suffers and who pays, not the same. Have you gone to Dubai? Recently? Yeah, sir?
Sorry?
Dubai?
No.
Saudi?
China.
You went to China?
Yes.
Okay. China have what?
Have what?
VAT.
That?
Saudi you went, huh?
Saudi, yeah.
Saudi when you go to supermarket or
Yes.
then let's say you buy a bread, 10 riyal, but you don't pay 10 riyal, you pay 11 riyal. Correct?
Yes.
Right. Now, actually the bread, the selling price is 10 riyal, but you have to pay how much? 11. In that, if I bring that example. That means you are suffering additional 1 riyal. You are giving to whom? To the shopman. Are you going to the department and paying this?
No.
No. Who will pay that money to the department? That's shopman.
Yes.
So, who the customer is suffering that additional 10%, but the customer is not paying that to the department. Customer has no idea about what the income tax department is. That type of taxes are known as indirect tax. The very good example for that is VAT. What is the full form? Value added tax. Also, you have another one here. GST, very famous in India. Goods and services tax. These all are, we have another name,
Sales tax.
sales tax. So now we need to understand this is the topic that we are going to talk about. When you inshallah move to the next level, there is a subject called F6 that is completely about income tax. There you will study direct tax, indirect tax, kida, full sheet you will study. But now, just for the sake of an additional flavor of income tax knowledge, we will study this. So, now we talk about persons for tax purposes. When you talk about these tax purposes, we can classify these persons. So we have two types of persons. Registered person and unregistered persons. The registered persons I can further subcategorize. So, in summary, there are how many types of persons? Huh? Five? Where are five? Hmm?
What did you ask?
My question is, in summary, there are how many types of persons?
So,
Hmm?
four.
How? Tell me how I get four.
Registered. Three
Hmm?
people.
Three. There are three types of persons. Totally unregistered persons. And then you have registered, but then registered person we have two more categories. One is standard rated, other one is zero. Now the question is, how to decide registered to unregistered? How I know? It depends on the country's tax regime. Now, Sri Lanka rule and UK rule and Qatar rule is not same. Now, Egypt you have tax. So the Egypt rule is also different. So country to country, the tax law will tell you how to. That's number one. Number two. Sales threshold. What do you mean by sales threshold? In a year or in a quarter, if my sales exceed, in UK terms, I think it's 50,000 pounds or 500,000 pounds. But don't worry, that they will give you. If you exceed 500,000 pounds a quarter or 2 million a year, then you need to register. Exactly. In a total of 3 months, your sales total exceeding 500,000, then you are compelled to register as a registered person. And if your sales is less than the threshold, you don't need to register. And number three, like for example, you are manufacturing drugs, meaning medicines. then you don't need to register. You are exempted. Or you are manufacturing food item, bread, bun, the day-to-day needs of the public, then you don't need to register. And number also, you are producing something that is uplifting the economy of the country, agricultural, then you don't need to register, like that.
What you mean by registered or unregistered? In what?
Let's say I start a business, STE. Do I need to register for this tax purposes or not? Is the question. In that I have several options here. First I need to read the tax law of Qatar. And sometimes Qatar tax law may say all audit firms should register for tax purposes. Then I have no question, I have to register. Number two, my quarterly or annual sales. And the tax law may say that if the quarterly sales is exceeding 200,000 riyal or 500,000 riyal, you should register, class, you should register. Number three, the tax law also may say if you are producing let's say agricultural items, some like what do you say in English? Like
Fertilizer.
fertilizers, for example. If you are producing fertilizers, then that is helping for your agriculture. Or if you are producing seeds, agricultural seeds, then you are uplifting the economy of the country. So then the tax laws may say, if you are these category of people who are doing this business, you don't need to register. Clear? So this depending on this. So either you become an unregistered person or you become a registered person. And then again two categories we have. Standard registered and zero rated registered. Now to understand that, now we talk about input and output. Let's say we have okay, anyway, now this diagram you will come across before. Input, process, output.
Data process.
Yeah, in data. A very simple example is you have paddy, manu paddy, paddy, manu mala.
Rice, okay.
Before rice, in the tree you have sugulada.
Not the same.
Hala penny.
هو كان مظبوط. ده لسه حد السنبلة.
Sumbula, correct.
أيوه.
Hala penny. When you put to mill, then this becomes
Sumbula. Sumbula.
actually rice. When I say this one is the next step. But both in English we use the same name, rice. But in Tamil we have three names. I don't know Arabic also. I think Hada Hus, Hada Sun, Hada Baldur Hus, Plurus. Hadi Pitani Avalana Suktum, Hada Sun.
Sumbula, right?
لسه ده زرع هذا لسه.
So now the process I mean, this is a diagram to understand. You have some input, you put this input into a process, and then that gets converted into an output. So this output is a saleable item, either a goods or a service. But you cannot suddenly have something for saleable item. You need to incur certain input or put some input to make or convert them into output. Correct? Now brother, here it's not only, see, here I need to have material. Correct? This example, in this case, penny. We also need to have labor. We also need to have overheads. So the total of these three I am putting into this process, and that's get converted into rice. So when I talk about these three, do we incur expense or not? We incur expense. So that expense we call it input cost. And because of that, and because of completing the process, we have something to sell. So we have that, we call it output. Now, a mechanism introduced by the tax department to find out something called value addition. So see, I buy flour, palm flour, and then I make bread. Then I have bread. When I put 2 or 1.2 kilogram of flour, maybe I will have 500 gram worth of bread. Can we eat the flour? No, but the bread we can eat. So this flour is added certain value, and then that is getting converted to bread. So now let's say that if you will buy the flour for 1 kilo, let's say you are paying 5 riyals or $5. If you will buy the bread for 1 kilo, let's say you need to pay $8 or $8. So what has happened now? There is a value addition of how much? So the value got added by value added. The tax department is looking. You see, I have 0 value, then 5, then 8. Correct? Because at the time of producing the bread, the bakery, when I am starting the business, I don't have anything. So I went to purchase the flour. So the flour costed me 5. So when I buy the flour, I have added the value of how much? $5 I added the value. And then this flour, it is been processed and then converted to bread, and then I added another value of 3. See here, this I am buying from the retailer. Correct? And this is a bakery. And this is a bread shop. So when the retailer selling this flour to the bakery, the government, if they impose a law on charge your taxes on the value, for the bakery, they have an input. How much is input? 5. And the bakery, what was the output? 8. So the department will require tax on input and output. The department requires tax on what? Input and output. So if I am the bakery man, I have to pay tax on my input, and then I have to collect tax on my output. Clear? So let's say 15% is the sales tax. So the bakery man, how much he should pay input tax? How much he should pay input tax? 5 into 15%. Am I right? How much is that? Calculate. You are all over calculator. Now what's the problem? Just looking at the sky and waiting.
75%.
Huh?
75.
What?
5, 15,
Yeah,
15
5 into
percentage.
15%. How much?
75.
0.75.
0.75.
0.75 is my input tax. Now, what will be my output tax? 8 into 15%. How much is that? 1 point? 1.2. So, now I collected 0.75, sorry, I paid 0.75 on behalf of whom? To whom this money should go?
Tax department.
To the tax department. So I paid to someone 0.75 on behalf of the department. And I collected 1.2 from someone on behalf of whom? So, then how much money I should remit to the department?
1.2 minus.
Exactly, 1.2 minus 0.75, which is how much?
45. 45.
0.45.
45.
In other words, 3 into 15%. Got it?
Instead of doing all this, you can just subtract the 8, 5 from the 8 and then find it.
Yeah, you can do that. But to make yourself understand both sides, you need to understand this. So anyway, now I was talking about now. Okay. So we have here, as I told you, standard rated and zero rated. If someone is a standard rated person, he should pay and he should charge sales tax at the prevailing rate. So this guy, all his input and output, he should incorporate sales tax. Whereas, if it is zero rated, only on input he should incorporate sales tax. I will give you an example. Is this clear? Now, to make you understand, let's say we have two different business, A and B. A is a standard rated business, B is a zero rated business. In A situation, his input cost 10,000. He also input cost 10,000. The sales value $15,000. Here standard. Here. So we, let's say the sales take 10% to make our life easy. This percentage is the department is giving. So I'm just giving example. So my output tax 15,000 into 10%. How much is that? 1,000. My input tax 10,000 into 10%. So I have a net tax payable. How much? Is that clear? Clear? Now when you go to this person now, his output tax 15,000 into 0%. How much is that? 0. Whereas his input tax 10,000 into 10%, sorry. 10,000 into 10%, which is 1,000. So we have a minus 1,000, meaning receivable from department. He should receive this money from the department. If any business whose tax rate is 0 rated, all his output tax, he cannot charge tax on the customers. Let's say I am running a business, you are my customer, you have an invoice below 40,000. If my business is a 0 rated business, I cannot charge any tax on you. But all my input, I have to pay my taxes. And if I am registered with 0 rated, that input tax I can recover from the department. Very clear? Now, try to understand
So
this
in
fellow.
that, so in that situation, if it is recoverable, tax department will pay you.
That's another interesting point to talk. You know turtles? Mountain turtles? Then you can Google. Yes. Mountain officer. Meaning, we have a good.
Sure.
People are same tax department. Oh, articles. Understood? Amala by looking by you will never ever department will pay you back. Money goes inside the department, master kalas. So you got to be very careful. But anyway, situation road is like this. So now we talk about this. In this situation, the same example if I bring is output 15,000 and then we cannot charge any tax, 0. Input, let's say I am a business person who not registered, but I am dealing with one supplier who can be registered or unregistered. Possible? One supplier can be a registered supplier, another supplier can be an unregistered supplier. Now let's assume I am dealing with one registered supplier. So for that supplier I am what? Who am I? I am a customer. Correct? So he will, when he is selling item to me, if he is a registered supplier, he will charge me tax or not? He will charge me tax. So input 10,000 into 10%. How much is coming? 1,000. Now this 1,000, can I recover from the department? No, because I am unregistered. Then this money becomes an expense. So now tell me, what will be the cost for an unregistered man? Input cost will be how much? Huh? What was the input cost here? How much? 11,000. 10,000 already a cost, and this 1,000 what is paid to him, I cannot recover. Because I cannot go to department, Mudir Kefala, Alpha. You cannot get it because you are not a registered supplier. And this will become a cost. So this is the what do you call analytics of this. Now we will look into the double entries. Okay? Is going to sleep now. So what's the time now? We will stop. No problem. And I will continue this tomorrow inshallah. So we will stop that.